You're watching India Development Debate. I'm Sandeep Gurumurthy joining you from our news centre in New Delhi. And straight to the big debate tonight. Now, just a week after the 11,400 crore rupee PNB scam shocked the financial world, the heat is clearly on the RBI. Earlier today, ET now broke the story of how the government is upset over the fact that the mega scam went undetected by the all-powerful banking regulator. The Finance Ministry has also raised questions over the efficiency of the surveillance systems and the monitoring mechanism post the shocking turn of events. Not just that, the government has even asked the RBI to find out if its own men had any role to play. All this is happening at a time when the investigating agencies are tightening the noose around the fraudsters. On a different level, the fight between PNB and the other lenders over the damages is only getting worse. We understand that the peer banks and the Nirav Modi scam have approached the central bank seeking its intervention to get their dues cleared from PNB. The PNB scam raises some obvious questions as RBI failed the stress test as far as the surveillance system is concerned. Or is it just a case of making RBI the fall guy? As days go by, will more skeletons come tumbling out of the cupboard? More importantly, what are the governance reforms that are in order? Is privatization the only answer to all the ills that the banking system is facing today? The aftershocks of the big bank loot. That's our topic of debate tonight on the India Development Debate. Joining us on the show this evening, it's a no politician panel. Maithili Busturmat, consulting editor, ET Now, Gurcharan Das, author and commentator, former CEO PNG India, Ashwin Parekh, managing partner, Ashwin Parekh Advisory Services, Meera Sanyal, former CEO and chairman, Royal Bank of Scotland, India, and Satwik Verma, corporate lawyer. We've had enough of politicians trading charges at each other, blaming each other. So we thought, let's take a break from all of that, get you real experts, try and understand what's happened, what's going to be the implication of what has happened, and more importantly, what are the solutions from here on. Meera Sanyal, you know, it's been a week and yet we clearly haven't got our head around the scam yet. Have you got your head around this scam? How did this 280 odd crore fraud morph into becoming an 11,000 crore scam? Have you found the answer that you were looking for last week on this very program? Because while a lot of information is being thrown at all of us, facts continue to elude us.
I think you're absolutely right, Sandeep. It seems like all smoking mirrors, around this entire issue. As I said earlier, the 280 crores is quite clear how that fraud took place and what that amount is. How this amount has translated itself into 11,400 crores is still not clear. And given the amount of time that has elapsed, I think the matter can be clarified very simply, because PNB should be able to tell, the senior management of PNB should be able to tell us or the RBI how many, how many LOUs were issued, but also against those LOUs, how much was actually paid out to banks and not recovered from Nirav Modi or from Mehul Choksi. This is a very straightforward number which they should be able to come up with. Likewise, the overseas branches of Allahabad Bank, of State Bank of India, of Union Bank, of Axis Bank should be able to tell us what were their funds and non-funds based facilities to these group companies, how much was paid out and how much was claimed from PNB. This is very straightforward information, and I have no doubt that the Reserve Bank of India has sent these banks letters as they have sent to many other banks, and so this data should be readily available. This unfortunately is beginning to seem a bit like, the demonetization, where 15, 16 months after the event, people claim they're still counting the notes. This is a very strange situation, to be quite candid with you.
It is indeed, and Maithili, coming to you, since the RBI and the PNB aren't answering some very basic questions here, for the benefit of our viewers, and I sort of do want to revisit what happened in some sense. This 280 becoming 11,000 crores, the only logical way this could have happened is that a series of LOUs kept getting issued every year, kept getting rolled over every year, and Nirav Modi basically never paid at any stage back to Punjab National Bank, and so it kept getting rolled over along with the principal and interest. Is that the only logical way in which this 11,000 crore figure could have been arrived at?
I think we'll have to wait a little, Sandeep, be a little patient until we get the final figure, because right now there is no complete clarity on how many LOUs were issued, how many LCs were issued, how much was retired, which are the companies which got that buyer's credit. So I think we'll have to wait and see, not as long as in the case of demonetization, the volumes and the quantities were huge. So in fact, even in the case of demonetization, it does take time, contrary to what Meera says, to actually count and find out which are the counterfeit notes, etc. So in this case, I think we should get a fix a little earlier, but it's not an easy matter to really find out what are the claims, counterclaims, how much was settled by Nirav Modi. So I think it will take us a little bit of time, which is perhaps the RBI and the investigating agencies are trying to get at. What exactly was the modus operandi? How was there such a colossal failure of systems and procedures at PNB? Because clearly there has been a colossal failure of systems and procedures in PNB. But I'm a little dismayed also by the kind of mass hysteria that has followed, because as I said, banking without fraud doesn't exist. NPAs and fraud are part and parcel of any banking industry. So what we really need to do is try and minimize the scope for fraud, scope for NPAs, and whenever such a thing arises, crack down on that quickly and surely, and ensure that the severe deterrent punishment is meted out to the guilty. So I think we need to be a little patient and wait for the investigating agencies to give us the clear numbers, as also the modus operandi. Right now there is a fair amount of opacity and we really cannot jump to conclusions.
What Maitri is saying is, let's bring down the decibel level a bit. There's been far too much noise over the last few days, and so she says this mass hysteria is probably unwarranted. Mr. Gulshan Das, do you agree with Maitli that this sort of mass hysteria is sort of unwarranted, or do you think this sort of anguish is sort of not without reason? The fact that common citizens of this country feel that you have these fat cat billionaires who seem to get away time and again, and the system just isn't able to nab them at any stage. So and that we have so many unanswered questions even a week into the scam. So your initial comments.
Well, this could have happened anywhere, but the chances of this occurring in a public sector bank in India are far, far greater. And therefore, we really have to go to the root of the problem. Why is it, for example, that the NPA problem was essentially a public sector problem in India? No liberal democracy today in the world has 70% of its assets controlled by public sector banks. We know time and again, and I've been on the board of Air India and on several other government entities, and governments cannot run business. And that is something which we thought that when we elected Mr. Modi, that there would be a difference, a real push of a kind, but it hasn't happened. Now this NPA crisis was a perfect opportunity to bring down the equity of the government to below 50% in at least 5 of the worst banks. It need not have been PNB. PNB is not one of the worst banks. That's the irony of it. But there are much worse banks. The point here is that in the private sector, it is somebody's money.
Right.
In the government, it is sarkari money. And really, ultimately, we must bite the bullet. Indira Gandhi made a mistake, and right. No leader after her has dared to rectify this mistake, and it's holding India back. It's holding us back as a nation. Okay. And here we are blaming the RBI, we're blaming this, we are doing that. These are all symptoms of the disease. But the real disease is the fact that
the ownership of State Bank. Okay, Mr. Das, I know Maitli has a very different point of view, and this is one key factor that we're going to debate, which is why right up front I said, is privatization the solution? I know Maitli doesn't believe so, and we will debate that. But I want to get opening comments from my panelists, address some of the unanswered questions, and then we'll get to the solutions. And I assure you we'll give due time to that. Ashwin Parekh, as Ravi Venkatesan, who's now the chairman of the Bank of Baroda, very eloquently put it in a column today, are India's PSU banks accident prone by design?
Yeah. Well, I mean, that's a very subtle and a little sharp observation. But I would certainly agree that they are prone they are. And let's put some of the micro issues first, and then let's look at the larger issues, which are actually, are really bothering the public sector banking system at the moment. One is when you look at the entire technology and the adaptation of technology in the public sector banking. I mean, it's very different from the way private sector banking has addressed the technology issue. I mean, this is not the first time. Here we are talking about how well SWIFT could have been integrated with core banking, whether everything on SWIFT, for example, which is merely a messaging kind of a system, could be integrated into the core banking. What controls are available? I mean, if you go into the architecture of any bank, the technology architecture, you find that there are several points of interface which are there with the external applications or external systems, be it in payments, be it in call centers, be it in treasury. They have several external environments. The success of technology adaptation lies with how well these are integrated. Now, I mean, if you find, for instance, that there are process control lapses, if there is too much of human intervention in, let's say, the interface or the integration between the systems, then in that case, such situations are bound to arise. Now, we have a situation, for example, right from the very beginning, the technology as skill set within public sector bank was simply not, I mean, information technology was simply not available with the banking system of the same order and magnitude as, let's say, the private sector banking had. So, I mean, that's one major differentiation. Governance is the other larger issue. So, I mean, I do agree with the observation that public sector banking is perhaps more prone, to such kind of, let's say, exposures or lapses or weaknesses, and then they show up periodically. I mean, let's look at NPS, for example. I mean, quite aside of this fraud. Fraud is something where, somebody does something with an intent, and therefore he, in fact, is a little ahead of the rest of the system, to the extent of he has found out the weaknesses, he's found out the lapses, and then he can certainly use the weakness to his advantage. That's right. Fraud. But in this particular case, in case of NPS, for example,
right,
can we say all of it was fraud? I don't think so. But lapses there were.
Okay, so we need to fix those lapses, and I'm glad we're already talking solutions at the start of the show. I thought we'll get there at the end, but let's sort of look at apportioning the blame. I do want this to be a little provocative as well. Sathya Kurma joins in as well, but first to you, Meera Sanyal, how would you apportion the blame? I mean, errant officials obviously are largely responsible. How much of the blame goes to top management? How much of the blame goes to the auditors, the internal auditors, the concurrent auditors, the Central Bank of India, the government? How would you apportion blame?
Well, I think rather than apportioning blame, Sandeep, what we should look at is where is the accountability? Clearly, there is a certain amount of accountability at the operational level in PNB, but then eventually that accountability rests with the CMD or the CEO of Punjab National Bank and with the board of directors. Likewise, the internal auditors and the statutory auditors. If you recall, in the Satyam fraud, Mr. Raju is in jail serving a sentence as the main perpetrator of the fraud, but the auditors were pulled up very, very severely, and there were strictures against them. Then, of course, you have the role of the regulator. Let us have no doubt that we have an extremely competent regulator in the Reserve Bank of India. It seems quite extraordinary to me that they should have missed this out, and which is why I'm still struggling to understand what has happened. But indeed, if it is the case that if the regulators also have slipped up on this, then the RBI and the senior management of the RBI is also accountable. And then, of course, is the Department of Banking Supervision, is the Ministry of Finance, is the Finance Minister. If we are talking of a scam or a fraud to the magnitude of 11,000 crores, and indeed if it is this amount or even larger, then we should have accountability being fixed and people paying the price for it somehow or the other.
Okay, we should have accountability being fixed and people paying the price for it somewhere or the other. Maithili, before I take it to Sathwik and get the legal view, Maithili, I want to address this important issue, which is a big headline today, which is the government is now clearly shifting the blame to the central bank. And this is, an internal note from the Ministry of Finance to RBI and to the Prime Minister's office, which clearly says, and I'm quoting from here, the fraud in PNB is a manifestation of the supervisory failure to ensure compliance with controls. Further, since the fraud in PNB is not the first such instance, the recurrence in PNB raises a question about the efficacy of supervision to detect and check systemic failure. It goes on to say the framework designed by RBI to prevent and detect such frauds is inadequate, or RBI is unable to ensure its effective implication. Either way, it's not a happy state of affairs. So the government is mincing no words here, Maithili.
Well, yes. It is true that the RBI inspection leaves much to be desired, but it's also a fact that you cannot catch every fraud. It's not easy. But as we can see from the AQR, and here, Sandeep, I think we need to distinguish between fraud and NPA. A fraud, as Ashwin Parekh said, is a deliberate act. And that is because of a failure of systems, in this particular case, in the case of PNB. But certainly the RBI inspection should have caught it. But over the years, RBI inspection, they have diluted the impact of that, because earlier RBI used to inspect larger branches also, apart from the central office of the bank. Over a period of time, the RBI has reduced its inspection of the branches and has been focusing only at the head office level and also on internal reports from the bank. So clearly, as things like reconciliation of the Nostro account, there the RBI has not done a good job. So I think we do need to question the RBI, and perhaps I have a sense that part of the reason might be because ever since RBI's goal was made purely inflation targeting, the central bank started focusing only on that aspect of its role, whereas in the RBI in India, the central bank has multiple roles. It is a banker to the government, debt manager to the government, regulator and supervisor of banks. So all these other roles got a bit of a backseat, and I think we are paying the price for that. Remember, it's been almost 6 months since the Deputy Governor in charge of commercial banking, Mr. Mundra, retired, but we don't even have a Deputy Governor in place. So the lack of expertise of the RBI to some extent is responsible, but it's not the RBI alone. It is a combination of many, many factors. The failure of systems in PNB, the bias rate extended by other banks, they are also to some extent liable. Why did they not check such large amount of outstandings? So I think there's a lack of clarity. Internal auditors, external auditors, the Reserve Bank of India, and of course the fact in the case of public sector banks, there is a certain amount of political interference, which in the case of NPAs particularly since they lend to infrastructure sector, for instance, that is something that the private sector banks just don't do. They stick to safer retail loans. So it's a combination of factors, very difficult to apportion blame, but many players are responsible. But in the case of fraud, PNB I would hold more guilty.
Okay, you'd hold PNB more guilty. Gulshan Das, is the government trying to pass the buck here, shift the blame to the RBI because it's under political heat? Obviously, UPA is a favourite whipping boy, but after that, is it trying to say that, look, you can't hold us responsible for what is a banking failure? We're not the governor, we're not the regulator of banks in this country.
I've been on public sector boards as well as private sector boards. I've run a private sector company, and I can only say that the incentive system is wrong in the public sector. You will never have the professionalization. You'll never have the nimbleness of action that you will have in the private sector. And therefore, I come back again that that something is rotten when 70% of the nation's assets are managed unprofessionally. And I could tell you horror stories of some of the public sector, especially Air India, where I was on the board, and the things that went wrong. And so I just feel the incentive system, the governments should govern. The job of the government, strengthening of regulators. We've been talking about RBI and other regulators. But ultimately, if that's where the focus of the government was, and was not in the running of the banks, there are also conflicts of interests in having the RBI, members of RBI on boards, etc. I think that these are some of the ills that still, and the damage, we don't realize how much damage has been caused to and it's the opportunity loss. Fortunately now, technology has made it possible to take banking to the people. And we can bypass to some extent the branch system that we had, the way we bypassed the landline. Mm-hmm. So I mean, it sounds like I'm singing the same tune again and again,
No.
but I feel deep in my bones that this is ultimately the cause, and the banking crisis, you know, every 5 years, every 10 years, we have a banking crisis.
Right.
And good money, hard-earned taxpayers' money
is used to recapitalize
goes
these PSU
into
banks.
recapitalizing
Absolutely.
the banks.
Yeah, it's a fair point, and the point that you made about boards is equally valid, because at the end of the day, look at the board representation or the mandate of the board of a PSU bank. Can they appoint the MD and the CEO? They can't. Can they appoint executive directors? They can't. Can they set targets for the board? They can't. So, what are they there for, other than serving the interests of the government, which is the largest shareholder? But Satvik Verma, let me bring you in here and get the legal perspective. Again, there are so many unanswered questions really on this scam, on how it unfolded. How could it have been pulled off by few, by few low-level employees of a bank? What do you make of it? Why do you believe there is so much of? Why do you believe it's still shredded in so much of secrecy? Why are so many facts still not out there in the public domain? Both that are not being placed there, both by PNB and by the RBI. Meera Sanyal earlier made this point about she believes that are they trying to hide something? How are you viewing this?
Sandeep, I think that's a great question. As your colleague from ET Now said, I think it's really a combination of factors. I do believe that at this stage, to be very honest, from whatever I'm reading, I don't think that even PNB really knows on how deep this malaise is and what is the actual amount of fraud that's involved. That's point one. Point two, I think we've already, between the last 4 days that we've had this issue, the number has moved from 11,600 crores to close to about 20,000 crores, with this morning the State Bank of India saying it might also have, a couple of thousand crores of exposure. So I really don't think that it's a matter of secrecy. I also don't believe that it's necessarily that they're trying to hide something. I genuinely believe that they don't know themselves on how deep the problem is and how deep this fraud is. That's one. Number two, and I think equally more importantly, we need to now focus on where the problem lies, which is the problem of corporate governance. And I think that's an issue that I, as a lawyer, believe we've seen multiple times. I heard Meera Sanyal talk about Satyam. I don't think we learned our lessons from there. We've overhauled the corporate governance norm multiple times. The Companies Act last year came out with an extremely robust provision, both in terms of the responsibilities, and for the first time it codified the responsibilities in law that even independent directors can be personally liable for issues. But I don't think we've learned the lesson even from there. And I think part of that problem lies in your own statement, Sandeep, which I agree with you on. How could just a bunch and a couple of low-level employees have managed to do something as gigantic as this, and it having gone unnoticed? Yes, people are raising issues that how could PNB be getting these awards of being the most vigilant firm when this was happening right under its nose. But
right.
The reality, from whatever one has been able to gather now, Sandeep, is that at this stage, even PNB is trying to do its own fact finding. I think Mr. Shetty, who's one of the prime accused, has only just come into the police custody. The other people involved, both in terms of Mr. Modi and Mehul Choksi, are not here. There is absolutely a maze in terms of 20s and 40 companies. One doesn't even know the number of companies that are involved, and I think it will take a lot of time. The greater issue, therefore, is that what could PNB have done better? Why is it that this gentleman, who was Mr. Shetty, who should have only been in that seat for a limited period of 6 months, how did he manage to get himself continuously renewed? How were those letters of undertaking given without a collateral? How did the other banks internationally, all of them, who were also largely PSU banks, extend these loan facilities? Okay. And, from a legal perspective, Sandeep, this is not even the tip of the iceberg, if I may say so. There's Indeed. A lot more that's going to come out, and the legal process is not even going to go into play till these assets are not declared NPA, for which we have a 90-day period. So we're not even close to that situation yet.
Okay, this is not even the tip of the iceberg. That's the word from Satvik Verma. Meera Sanyal, some of the points raised by Satvik Verma, I want to debate that very briefly before we talk about solutions and address the privatization point made by Gurcharan Das in a more comprehensive manner. SWIFT, everyone knows now that it was done through a SWIFT transaction, though I wonder the clerk who got arrested if he even knows what is a SWIFT beyond a Maruti car, but let's leave that aside. SWIFT has 3 layers of security, maker, checker, receiver, and the receiver of the message as well, confirming creation of the loans. Actually, it's four layers, and every bank has separation of the maker, checker functions, you know it. How could it not have happened at PNB for 7 long years?
That's really a very good question. And I must say that in banks, there are certain areas where frauds typically take place. For example, in dead and dormant accounts. For example, in nostro accounts. For example, through telegraphic transfers of SWIFT. And much before the age of computerization and SWIFT, you had banking transactions taking place both domestically and abroad. And these were the classical areas where frauds could take place. And so every bank always had maker-checker functions, separated. You had extra vigilance both within the bank and from outside the bank on these areas. So, for example, the bank receiving the SWIFT message would send a confirmation and does and is supposed to send a confirmation message to the sending bank, not just in the office from where the message has originated, but to the regional office or to a central office. These messages are supposed to be reconciled on a daily basis. Nostro accounts are supposed to be reconciled. So to imagine that you have a hole of 11,400 crores, indeed, is very hard to stomach. We have to get to the bottom of this. What is really perplexing to me is, since these are very basic questions, why is no one answering them? Why is PNB not answering them? Why is the Reserve Bank of India not answering them? Because a normal person would say it can't be 11,400 crores, it must be only 280 crores. The fact that they are not coming out and giving us an answer makes me extremely worried. Maybe it's not 11,000 crores, maybe it's a multiple of that. I mean, now we simply don't know.
Maitri, the other sort of very obvious question, I'm trying to highlight the unanswered questions here because there's been so much of noise in the media and yet very little spotlight on some of the substantive issues that this scam has thrown up. How could fund entries in the nostro account in PNB not be detected again for 7 years? I mean, these entries that would have been made, repayment of the loan and of the principal and interest amount, these entries, in the nostro account surely could not have gone undetected. I understand that there was no reconciliation between SWIFT and the core banking software, but how could the entry in the nostro account not be detected, and even by the central bank? How could the central bank also not have seen any unusual activity in the nostro account over a period of 7 years?
Well, it's very difficult, it really defies understanding, but the only possible explanation to my mind, and here I am just conjecturing, is that possibly there was a constant rolling over of credit. So the PNB kept extending newer and newer loans, something that in banking is known as kite flying or accommodation bills, where you keep retiring the earlier bills with fresh credit. So it's basically like musical chairs, and that is what happened when finally the gentleman in question retired, and the new person took charge, and he asked that how come these letters of credit are being opened without margin? Where is the documentation? Then the entire procedure came out, the entire story came out that in the past they were being extended and bills were being retired through extension of fresh credit. So that is the only possible explanation. So RBI or the inspecting agencies or the auditors should have noticed these large transactions going in the nostro account, and somewhere somebody's antenna should have gone up. So clearly there was a complete failure of controls in the PNB, and the explanation that they were not integrated with the CBS is only a partial explanation, because my question is, why were they not integrated with the core banking solution? Because CBS is not something new. Core banking solutions, all nationalized banks have been on CBS for close to a decade now. So clearly there was a complete failure of controls at PNB, and there was nobody exercising the necessary oversight either within the bank or externally from the auditors or from the Reserve Bank of India, which is what is so worrisome, that why was this allowed to continue for so long? But I would like to disagree, Sandeep, when you talk about privatization, I'd like to disagree completely with Gurcharan Das on the idea that privatization is the answer.
Maitri, if I may please interrupt you.
Post 2008, the entire TAR of
Maithili, if I interrupt you,
Okay,
you know,
we'll come back
privatization,
later.
I'm going to give 10 minutes to privatization after the break. So just indulge me there. Just two more questions and I'm coming to privatization. That is the heart of the debate. Quick question to Ashwin Parekh. Should overseas banks not have raised an alarm on why these LOUs were getting rolled over year after year? The point that Maithili made is that maybe they got rolled over year after year, which is why, you know, the Nostro account, it didn't get detected. But should the overseas banks that were sort of paying back, should they not have raised an alarm that how come these LOUs are getting rolled over year after year over a period of 7 years? Mr. Parekh?
So once again, I mean, you know, we are waiting for the detail, but in the normal course, you know, Sandeep, what normally happens is that when the bank which is issuing the LOU, you know, issues a fresh LOU, then the assumption that the other participating banks could easily make, and therefore, I mean, I'm conjecturing at this point in time, but they could easily make an assumption that the previous one was settled. You know, so I mean, if you keep on really, so it's in some form or the other, it's an evergreening, you know, of the same line of credit, but with larger amounts. The responding banks may make an assumption that the previous one was settled, basically. So to that extent, I mean, I would certainly say that we'll have to wait for more detail to come in, you know. But once again, at the Nostro, at the overall level, if the reconciliation has to be carried out on virtually, you know, I mean, a daily or a real-time basis, then in that case, this unusual transaction trail could have easily established that things were rolled over without the settlement, without the cash coming in or the previous one getting settled at all. I mean, the number of LOU itself suggests that that must have been the practice. So the basic LOUs maybe perhaps were about 15 or 20, but then they kept on getting re-rolled, you know, I mean, again and again. So for different banks, different lines of credits or LOUs were opened up, and then responding banks kept on responding with the assumption that the generating bank had actually settled that amount, sort of.
Okay. Fair point indeed. Gurcharan Das, I know you want to talk about the road ahead, but a quick question that I want to ask you on the role of auditors. And you know, concurrent auditors in bank branches are assigned the specific job of you know, transaction verification. So isn't it sort of baffling that over a period of 7 years, the concurrent auditors missed it, the internal auditors missed it, the statutory auditors missed it, that the entire, I mean, you know, do the auditors really have a lot of answering to do in this particular case?
I haven't read the report, but what I read in the newspapers today or yesterday was the fact that the auditors had pointed out to a problem. Now I don't know how deep they had gone in, but certainly the auditors should be held accountable as well. They're saying, I mean, what I read was that they had pointed out this sort of problem a couple of years ago. Now, what exactly it was, why it wasn't pursued, is a question that has not been answered. But clearly, in any organization, you make sure you have an internal audit, you have an external audit, you have an audit committee. I mean, they all have responsibilities. And it's a failure of that as well.
Absolutely. One quick question before I take a break, Satvik Verma, coming to you, which is on this, you know, just like two figures get escalated. One is, of course, the size of the scam. You know, 280 crores became 11,000 crores, became now 20,000 crores, as someone pointed out. And the other figure is the amount that the government has already recovered by seizing assets. You know, one day 5,000. Every day we hear a new figure on how much assets the government has seized. I want to understand, again, for the benefit of viewers, you know, how can you establish by seizing some assets, by some jewelry in Nirav Modi showrooms, how can you establish that these are proceeds of crime, and how can this be used to repay, to pay back PNB? Is that possible at all? What is the process there?
So Sandeep, I think there's a couple of things before I go there. I think, you know, one of the things where Mr. Das was talking about the complete failure, I think a bigger failure also, just to develop and add to what he said, was the fact that about a year ago, from what I understand, there was an income tax raid that was conducted on Mr. Choksi's businesses and Mr. Choksi's two listed companies. The failure is on what action, if at all any, was undertaken by either the Enforcement Directorate or any of the other revenue authorities post those raids, and what we did with the information that was made available. So that's point number one. Point number two, which is a greater failure, is that two of the companies, Nakshatra and Gili, are listed enterprises, and therefore there is not only a failure at the end of PNB, there is also a failure at the end of the listed enterprises of Mr. Mehul Choksi. So, you know, those are two additional failures, if I may point out. As far as the sums of money are concerned, and I read this in one of the newspapers and I tend to agree with it, is that, you know, currently it is believed that the diamonds that have been recovered or the jewelry that has been recovered is valued at 5,600 crores. Now the question that I ask myself is that unlike a normal jeweler where there is jewelry that has components of gold plus making charges plus diamonds, Mr. Nirav Modi's business was on a basis of each individual piece, and therefore from some of the valuations that the ED has put to these, I don't believe that they are all stones, because the stones per se go through, you know, a RAP report, and there is an entire scientific or somewhat of a scientific formula that calculates the value of the stones. But for made up jewelry, there isn't a scientific formula, and for that jewelry, you know, a large component of it was the brand value attached to Nirav Modi. Therefore, that 5,600 crores value may also not turn out to be, if it were to be liquidated, and I don't know how it would get liquidated, may not turn out to be 5,600 crores. Therefore, we are really at this stage, I think, you know, we're grappling with a lot of the unknown, and a lot of facts will only emerge once there is further sort of, you know, digging and examination that all of the revenue / income tax / other authorities come out with, both in terms of what is the amount of fraud that has been committed, whether it's 20,000 crores, and how much of the money is already there and how much needs to be recovered.
Okay, fair enough. On that note, I'm going to take a very quick break. When I come back, just two questions. One, is privatization the answer? Maitri and Gurcharan Das have a different take. We'll have them debated. And two, what's going to be the damage caused by this? Will this hurt credibility of Indian banks? The next time an Indian bank issues a buyer's credit, will an overseas regulator take it seriously? We'll talk about that and the solutions in just a few minutes from now. Keep it with the India Development Debate. Back with ET now. This is the India Development Debate. We've got two important issues to address. One is privatization the answer? Gurcharan Das, before we went into the break, made a strong case for why that's the only way out of this mess. Otherwise, they're going to keep having scams like the PNB scam. Maitri disagrees, and I'm going to give Maitri a chance to rebut. Maitri, go for it.
Well, Sandeep, my only contention with Mr. Gurcharan Das is that privatization does help make the banks more nimble, does make it more efficient. But privatization in itself does not mean that you will never have frauds. Because if you look at the US experience after the collapse of Lehman Brothers, the US taxpayer had to pay as much as $800 billion, and I repeat, $800 billion to bail out the banks. And not one of them was a public sector bank. The US has no public sector banks. They were all private sector banks. Likewise, recently in Italy, the Italian government had to bail out a private sector bank with $25 billion of taxpayer money. So all over the world, regardless of whether the bank is publicly owned or privately owned, when a bank gets into trouble, it is always taxpayer money that comes to bail them out. And this is because banking is a very peculiar kind of industry. It is essentially that if the bank fails, the collapse, the danger or the damage to the society and to the economy is so much worse than bailing out the bank that taxpayer money is invariably used, number one. Number two, if we look at banking crises all over the world, yes, capitalist system is such that you do have banking crises periodically all over the world. And an IMF research paper shows that actually countries all over the world on an average have spent close to 7% of their GDP in bailing out banks that got into trouble. In India, in contrast, we have spent less than 1%. So this is not to say that public sector banks, everything is hunky-dory with them. It is not. There's a great deal of scope for improvement, and that improvement can be done if government recognizes that there is a separation between ownership and control. They can be government-owned but run professionally. And this is what the government needs to realize. And this is what we were hoping to do with the Bank Boards Bureau, which unfortunately the government did not follow through. So you can be in the public sector and be very efficient, and we do have companies like BHEL which are an outstanding example of efficiently run public sector companies. We also have Air India, which is an outstanding example once again of a very inefficiently run public sector company. So one cannot tar all public sector banks with the same brush. If the government accepts separation of ownership and control, I think we can have a great deal of improvement in the way public sector banks operate.
Gurcharan Das, do you agree, or do you believe that the very design of, especially in the financial system, it lends itself to crony capitalism? You know, it's one thing to own an engineering company like BHEL, but quite another to own a bank where you have, you can give a loan to this person, approve this project. So that's where crony capitalism comes in. And do you believe that if not privatization, the government at least bring down its ownership to less than 50% as recommended by the PJ Naik committee in 2014?
Correct. Well, I would first of all suggest that you use the word crony socialism rather than crony capitalism. When 70% of the assets are owned by the state, it seems to be more like crony socialism at work. The question that I would, I think Maithili is right, these kind of frauds can occur at anywhere, and they do occur. But the chances of occurring in a society of low governance like India are far greater in the public sector. And therefore, I think it is, we should ask ourselves, despite the 2008 crisis, why is it that the rest of the world did not go ahead and do what Indira Gandhi did, which was to nationalize the banks? They did not do it. And I'm talking about almost the entire world here, that is the free world. And that we stand out. We stand out as a democratic, liberal democratic society where the public sector owns banks. It's almost, when you say 70%, the Competition Commission would call this dominance. A dominance. And as to control versus ownership, I would say that for 70 years we've been talking about this for our public sector, and we have not been able to do it. So why do we think it will be done now? And then we should ask ourselves, we've just come out of a banking, we're not still out of the NPA banking crisis, that really it's, two wrongs do not make a right. There seems to be nothing right. There are good public sector banks, but the incentive system is wrong when you have public sector. Public sector, the purpose of government is governance. And if they did the job of governance, if they reformed the judiciary, where it doesn't take 15 years to get justice, if they reformed the bureaucracy, where a person who works 1 hour and the person who works 12 hours get promoted on the same day. If we reformed the police, which is the handmaiden of the chief minister, these are the governance areas which are crying out for government attention.
Okay, fair enough.
Government should not be diverted from running things which they do not need to run. Okay. And that is really, I'm sounding ideological, but frankly, with the experience that I have had, I've come to this very, very sad conclusion.
Okay, and Swami made this similar point on this very show on Friday evening. So there are people who agree with this view, and of course we're here to debate that. But Ashwin Parekh, let's assume that the government is not going to privatize. I mean, I don't think that this government and this leadership likes the word privatization. They're doing that with Air India, but unfortunately or fortunately, in some cases, let's assume. What are the other specific governance reforms that you think are really important to ensure that, what Maithili said, can they be government owned and not government run? Is that possible at all? And specifically in terms of board structure, in terms of compensation structure, in terms of, HR practices, what are 3-4 key reforms that you think the government needs to look at to reboot the PSU banking space?
Sure. So, I mean, let me start with the very first observation, and that is, way back when Dr. P.J. Nayak committee was constituted by the RBI, and he issued a report to the regulator, and it was made public, immediately. We know that there were several recommendations. Now, if I have to really look at the recommendations in the larger perspective and group them and classify them, then governance perhaps was one of the most striking ones. And then within that also there were several recommendations, right from the appointment of the CEO MD to the senior management of the banks, to even the constitution of boards and strengthening the boards of the public sector banks. So all these there were 80 plus different recommendations of larger dimension. About 6 or 7 have been addressed, so far. So that's one aspect. Privatization per se is not really going to bring in all the answers. I mean, in an economy like ours, where there is an element of social responsibility, we are clearly looking at two different Indias, and we are looking at, let's say, inclusion on one side, we are looking at social banking on the other. There are these dimensions which also need to be examined. I mean, we know, for example, that when a program like Janadhan was carried out, 95% of the push happened from the public sector banking, and only 5% of that happened from private sector banking. So, I mean, and if all the private sector banking, the behavior was to really keep away from any kind of infrastructure related or risk taking kind of asset which go into the development of the economy, then perhaps, all the questions that we've raised on privatization and in favoring privatization may be negated, because we will still then clearly have two different Indias. A very progressive, healthy, with only 5% of the population getting the benefit out of the whole thing. So I suppose there are more number of factors. It's not a simple question. But to my mind,
right,
if we can still be public sector,
okay,
if we do not privatize, but if we start behaving like a private sector bank or a private sector enterprise, then perhaps, we have an answer.
Okay, that's an important perspective that you brought to the debate on why privatization is not necessarily the answer to the problem. I have exactly 2 minutes on the show. Meera Sanyal, to you first, and then I'm letting Satvik Verma have the last word, which is a broader question. How will this hurt the credibility of Indian banks, in terms of acceptability of our LOUs or buyers' credit? You had reports of how the Hong Kong banking regulator has pulled up the Indian overseas banks in Hong Kong that had issued these buyers' credit in this specific case. How is this going to hurt the credibility of Indian banks? This entire episode.
Well, I would certainly say that the banking system as a whole, the Indian banking system as a whole, is probably facing fairly rough waters. And this is really a very, very big pity, because for many years and through the global financial crisis, both our central bank, the Reserve Bank of India, and Indian banks emerged quite well out of that crisis. And I think across the world, Indian banks, Indian bankers, our Reserve Bank have been held in very, very high regard. This has certainly cast a doubt. It's cast a doubt on the credibility, on the competence, and indeed on the integrity of the entire Indian banking system, which has been, I think, one of the major and very sad fallouts of this entire episode.
Satvik Verma, I'll let you have the last word. India's track record with scams has been pretty poor of late. For our viewers who are watching and wondering what's going to happen next, will the perpetrators be brought to book? What are the chances that we'll get to the bottom of this, that the legal system, that the judiciary will be able to come up with and answer some of the questions that we raised in the debate this day? What are the chances that any of that will happen?
So, I wish I could really answer that on whether our judiciary will be able to bring the perpetrators to justice and not to really pass the buck on, but I think the question is whether our law enforcement authorities will be able to do enough that is even required to get to the bottom of these. You know, the legal process will go through, you know, whatever the law envisages. It will have to go through the mechanism and, you know, keep up with the rule of law. We know that these perpetrators, along with a bunch of others, have already gone overseas. You know, it's extremely difficult, as we are seeing in some of the other instances, and seems implausible, especially with certain countries where some of these perpetrators in this PNB scam have held citizenship from, that they are likely to come back, or definitely not anytime soon. You know, really, and I can't emphasize this enough, Sandeep, we have a very, very important task before ourselves today, and only then can the lawmakers and the judiciary act, which is to make sure that we really do get to the bottom of this. It's in nobody's interest to try and politicize this issue. The law enforcement authorities need to do whatever it takes. That means the enforcement directorate, the investigating body, the authorities under the PMLA, the income tax authorities, and really I think, you know, I completely agree with Meera Sanyal that the credibility of Indian banks overseas is not the best. We have multiple issues, and at this stage, with this kind of a crisis, given also the fact that Nirav Modi to some extent was an international bank, was an international brand, all of the international banks are focused on India to really see how we deal with this situation, and how we deal with this situation is going to be the way how we redeem ourselves in the eyes of the international banking community.
All right, completely timed out, but I can't thank this wonderful panel. We try to keep the decibel levels low, keep the politicians out of this debate, and try and find some answers to questions that continue to linger. Gurcharan Das, Satvik Verma, Ashwin Parekh, Meera Sanyal, Maithili Busruma, thanks for joining us on this special edition of Maithili. I'm completely timed out. We'll have to get that word in the next debate that we do on this issue. Thanks so much for being with us tonight.